Good afternoon, everyone. Thank you for being here today. We still have people joining us. We are happy to bring you this program regarding Hurricane Ian recovery. I wanted to call it "Don't Make Your Recovery a Bigger Disaster Than Ian," but I got overruled, so we were calling it the storm of a lifetime. We're fortunate to have some good speakers today. I would first like to tell you that this is our third webinar in the past 3 days, and our previous webinars are or will be available for reviewing on our firm's website. And we've tried to target these webinars to particular, sub-geographical groups, I guess is the right thing to say. But there are some things in there that I think are really good takeaways for everyone. So I would encourage you to go and look at those. You can probably fast forward, through them. Tuesday, we did a program that was focused on the city of Sanibel in Captiva. And there are a couple of really good takeaways from that program. We had the owner of one of the largest management companies on the island, probably the largest, speak about kind of boots on the ground, what his company is seeing in hurricane recovery. And I thought it was really helpful and telling, because one of the things we're seeing is everybody's kind of in a rush to be the first to get done. And there's this large perception that, our community's behind where everyone else is, getting pressure from our neighbors, all of that. And a couple of the really interesting takeaways from that is of maybe the 100 claims his company's involved with. I asked, how many have settled their flood insurance claim? Answer is 0. How many have settled their wind insurance claims? Answer, maybe 6 or 8 were so devastated that the carrier tendered full policy limits. Otherwise, 0. The state of the availability of electricity on Sanibel is one thing, Fort Myers Beach is another, but there were some interesting aspects there. We also had Craig Millay, who is the City of Sanibel building chief, and he spoke about how the City of Sanibel applies the FEMA 50% rule, which we're going to be talking about today with Sean McNulty, who I'll introduce later. Yesterday's program was focused on Fort Myers Beach, and I think the one program there that has certainly a broader application was a presentation by Matt Caldwell, who's the Lee County property appraiser. And Mr. Caldwell basically presented 2 new laws that were adopted during the December 2022 special session of the Florida legislature. And one of those is 2022 tax relief. And if your community, if damage from Hurricane Ian in your community resulted in the units being uninhabitable for more than 30 days, the owners are basically entitled to a prorated tax refund on their 2022 property taxes, whereby the number of days the unit was uninhabitable in 2022 is divided by 365, and you get that much of your money back. So, we have some condos that basically were uninhabitable for a full quarter of 2022, October, November, and December. But anything over 30 days, there is an avenue for relief. And Mr. Caldwell indicated he would like to work with boards and management companies to be able to get a good sense of how a particular community was impacted by Ian, because if there's 80 unit owners in the condo, he doesn't want to have to figure out 80 times if the buildings were in fact rendered uninhabitable or not. So be aware of that. The second part is a little bit of unsettled issue right now. The property appraisers are dealing with first what I just talked about, the 2022, but the second thing the Florida legislature did was to enact a law that allows for reduction in property taxes if your unit values were lessened by Ian. Now that's a little bit complex because it also has a relationship to valuation for FEMA 50% rules, which Sean is going to talk about, and a number of other issues. None of that's going to really be ripe for another 6 months probably. So just be on notice of that. The deadline for filing for the 2022 refund, I believe, is April April 23rd. It's in the materials. Don't take that to the bank, but it's I believe in April 23rd of 2023. So again, feel free to look at the relevant parts of those programs. So now to today's program. I'd first like to start by thanking our co-sponsor today, which is the Sanibel Captiva Community Bank. SanCap was started on Sanibel Island 20 years ago, which at its inception was basically a one branch bank that was catering to businesses and residents on Sanibel Island. Since then, it has grown to be, I think, the largest community bank in Southwest Florida, with branches all over the place. They have occupied a pretty significant space Sanibel. Today, we are fortunate to have the president and CEO of the bank, Kyle DeSico. Kyle has taken the helm of the bank and is ready to enlighten us about some things that are of interest. One of the things that we're going to talk about a little bit later is kind of transitioning from remediation to renovation, going from what we call phase 1 to phase 2. And obviously, money is the central driver of that. We're going to have, first of all, the association's deductible to deal with, which in most cases is a 6-figure and in many cases a 7-figure number. So that's one, that's one given. We're going to talk about special assessments and loss assessment coverage for that under the unit owner's HO6 policies. But then the second leg of that is your insurance. And of course, this storm is highly complicated by the fact that it was both a major flood event and a major wind event. So we have flood insurance, which is administered by the federal government generally, and we have wind insurance, which isn't. It's primarily through private companies who don't like to part with their money. As all of that unfolds, we have bills to pay. We have to determine how to cash flow jobs. Everyone is going to be different. Obviously, a condominium with $1.2 million in damage is going to be in a different situation than a condominium with $17 million in damage. And we're dealing with both, and smaller and larger, believe it or not. Some few substantially larger. So what Kyle's going to talk about is basically association lending, lines of credit, what SanCap has been seeing in the community. I've asked him just to talk a little bit about Ian recovery as a businessman in Southwest Florida who not only operates in the condo space but also lends money to restaurants and hotels and dry cleaners and everybody else who kind of makes our life go. So Kyle, take it away. You're on mute.
There we go. Joe, thank you so much for having me. I appreciate this opportunity and welcome everybody to the program. Like Joe said, my new position at the bank, title President and CEO, but I am not new to this bank. I've been here for 7 years. I'm not new to this area. I was all but born and raised here. I've lived here since I was a young boy, 7 years old. I've been through a few of these storms. I was here for Charlie. I was here for Wilma. I was here for Irma. Ian obviously was a little bit different. And it's obviously my first major storm as a leader of this institution. So starting with that, I will say that I know what you all are going through right now. This was not just a Sanibel or a Fort Myers Beach, event. This was a Lee County event. This was parts of Charlotte. This was parts of Collier and other areas. So I know some folks that I've spoke with, some folks on the news and customers of ours say, hey, don't forget about Cape Coral. Don't forget about inland Lee County, the River District off McGregor, Iona, other areas like that, because we understand that this was a very widespread flood event and wind event. And the bank ourselves, we were affected in both of those manners as well. Like Joe said, we are an island-based bank, but we are a off-island, prominently asset-heavy bank now. As the bank has grown, we have more assets and more clients off-island than we do have on-island. So that means the majority of our lendings and our deposits are now actually in central Lee County. So with that being said, like Joe referenced earlier, we bank the local business owners. We bank the builders, the developers, the end users, the single family homeowners, these individuals that are buying a condo, that are investing in apartments, that have a home that is in an HOA. So it's a broad spectrum of what our bank does. But I want to focus most of the attention, like Joe said, on what the bank has done in the past with HOA and condo association lending and how those special assessment loans work. And obviously, if there's any questions, I'd be more than happy to answer them. But I'll kind of speak in broad strokes. And then if there's anything, Joe, that you think I'm missing, please, by all means. I do want to start out by saying this, and Joe touched on it a little bit, is that there is a lot of gray area in association lending. No association is going to be the exact same. None are going to be the exact same size with the same amount of unit owners. And certainly none of these damages are all going to be alike. So the way that we go about this process is we have a small team here at the bank that focuses directly on those type of HOA and association loans, and we customize a product that will fit the needs of your association. So just by saying a few examples on what we're going to talk about here today, please know that we have the flexibility and the capacity to customize any type of product so it fits what your board of directors, what your bylaws allow you to do as far as lending, to help fix these products. To help fix the damages caused by Ian. And Joe touched on this again. This is association lending. It's an assignment of special assessment on what is dictated in your bylaws that you are able to do and what you are able to do to help recover from these type storms. So these are not liens directly on the real estate of your unit owners. They are not liens or borrowings that go directly to each individual unit owner. Okay, this is a single loan that the association takes out and that is repaid over a specific period of time for a specific purpose. In this case, we all know what that purpose would be. It would be by a special project needed, like a roof or a seawall or new sliding glass doors, or maybe in some cases it's much larger than that. But we work with those associations directly and with the management of those associations, their property management companies, and the board themselves, like I said, to make a customizable product that works for all parties.
Okay, so basically, Kyle, my understanding, and I guess all due disclosures in order. The bank was founded by Craig Albert, who spoke Tuesday at our seminar, and Craig. Actually, I've been married to his sister for 39 and a half years. So I can negotiate good rates because I have a lot of pictures from when we were in our 20s. So yeah, but yeah, I mean, one of the things I've always liked about SanCap is that they're very, I don't know what the right word is, lenient, straightforward on lending requirements. In fact, right before this call, I got a loan package that one of my partners is working on for one of our condos, where the lender is being represented by some AmLaw 100 firm in Miami. And I look at the closing package, and I, would have thought that we were buying, the Sears Tower or something. I mean, it's just like crazy. The transaction costs for that kind of loan are significant. They want an opinion of counsel that their loan from us, from the association's attorney, that their loan is valid. It's kind of like, isn't that what your attorney is supposed to decide? So it's like an insurance policy. So when you get these kinds of loans, which the big banks are, really, that's how they do it, the transaction costs are a lot higher. I found that with banks that are either community banks or that really have a niche in association lending, and there's several, they are a lot easier to work with. SanCap, for example, there's no opinion of counsel required. They look at the bylaws and make sure you can borrow, and during emergency, associations can borrow anyways. You don't need to get into all that mumbo jumbo. Basically, what the bank requires in the deals we've had with them is the board levy a special assessment for this damage and pledge the proceeds to the bank. Using easy math and an easy example, if you have a 10-unit condominium and you want to borrow $1 million, that's $100,000 a unit. Many associations levy a special assessment for $1 million, $100,000 a unit, but then allow owners who want to prepay it all to do that. So they're not going to participate in interest expense. Then for those who don't, it would be like, $25,000 a year due on December 31st of each of the next 4 years. And the bank basically takes your right to receive those as the only collateral for the loan. They file a UCC1 statement in Tallahassee. That's it. I mean, there's a promissory note, a loan agreement, and we're done. There's not 9,000 pages of loan documents to deal with. Usually, the way that most banks will do it is they time it to the association's receipt. So if the association's receiving that $25,000 payment on December 31, its next loan principal reduction would be due like January 31. Give you 30 days to collect your money, and and all of that. My experience has been that that the thing that your bank, for example, and others do is the line of credit concept. you've got $1 million worth of credit and it's there if you need it, but you may not need it. So if you don't draw down on it, you don't have to pay interest on it, as opposed to if you borrow $1 million and stick it in the bank where it's going to earn, 0.5% of interest, you're still paying interest on it. So yeah, that's basically that. One of the things, Kyle, that I've been asked quite a bit is, associations have different banking relationships, and the management companies drive that to some degree. But what if we get a check for $7 million from our insurance company that we're going to have to pay out over a couple of years to contractors? If we put it in your bank, for example, or any bank really, and the FDIC limits are $250,000, if you and Craig run off to Tahiti, aren't we at risk for that money?
Good question, Joe. We do have products in the bank through ICS and other third-party companies where we have full FDIC insurance up to $100 million.
Right.
So
is that the CDARS program?
It's the CDARS program, and there's ICS programs as well. We can tie that to a money market account, a standard checking account, or you can even put it in a 28-day revolving CD that is actually paying the highest right now. Don't quote me exactly, but I want to say it's on the high 3% range. So what a lot of our customers are doing right now, and you did speak about this earlier, that there's not a lot that have gotten full repayments from their insurance companies, full payouts yet from their insurance companies, but those that have, some of them are coming into the bank and opening up a savings account or a CDARS account for that 28-day revolving CD and getting a very nice rate of return, knowing that their roof, they might have to put down a 20% deposit, but the roof won't be put on, completed for another 6 months. So
basically then the association can confirm, and this isn't just with small banks, with big banks, that's FDIC limits, and I guess no bank's too big to fail, we've learned. But if they use the CDARS or this other program, I mean, Craig told me there's like 100 banks are technically holding the money then. So
that's correct. That's
correct.
There's
holding it only up to FDIC limits.
That's correct. It's overnight funds going to other institutions that are also in that same product. This way it spreads everything out, but you receive one statement and you get the highest rate of return and still that full protection up to $100 million.
Okay. So tell us just, kind of off the cuff, as a, businessman in the community and someone who lends money outside of the association space as well, like I said, and like you said, to, restaurants, dry cleaners, developers, people buying homes. Why don't we start with what does your crystal ball say about the real estate market in Lee County over the next 12 months? Because we were in kind of a crazy market anyway, it had gone really nuts high. There was some signs it was cooling. Of course, we've got all the national influences of interest rates and the Fed. We seem immune to that until we bust like we did in 2008. But the storm is obviously a major game changer. I've heard different things. Your property value, if your property is habitable, is going to go up because people need a place to live, but people may not want to move here. But I've heard memories are short. What does Kyle DeSico say about all this?
Well, I will start out by saying that I'm extremely bullish in this market. I believe that our waters, our areas of Sanibel, Captiva, of Fort Myers Beach, they were hit, but they will rebuild, and they will rebuild stronger and better. And I know you've probably heard that, but the historical numbers of people that study these type of events over the last 100 years, 50 years, it's proven every time that after a huge event like this, where there are funds available and where there were people and it had a strong economy going into the storm, that all of these locations always come back stronger. The bank is actually forecasting directly for that. We are budgeting for that. I truly believe that our institution, that other institutions here in Southwest Florida, they're going to have to help the community rebuild. They're going to have to provide the capital to those associations, to those custom home builders, to the roofing companies, to the plumbers. The capital has to be made available for that to happen, and it will. You're seeing it when you drive up and down McGregor, when you drive up and down 41. You see these work trucks from out of state, and it's not just the demo trucks, or not just the not just the FEMA trucks. I'm talking about new roofing companies in town that are probably going to be here to stay for 3 to 5 years. New plumbing companies that are going to be here to stay for a long time. Again, we're very bullish on this market. I have not seen any slowdown in either residential or commercial loan requests. Our market, in my figures, are entering an area where we're no longer a small town. We are no longer, Lee County, where we're somewhere on the map between a Sarasota and a Naples. I foresee that our area of Lee County is going to be right up there with a Sarasota in upcoming years. I think Fort Myers Beach has the capacity, and how they want to rebuild on Fort Myers Beach, that it is going to be a place that rivals some of those beach communities to our northern borders up in Sarasota or across the state on the East Coast. Sanibel is going to continue to be a very special place, given what it is and the building restrictions that they have out there. The single family homes on the beach, those will be rebuilt. The island did what it was supposed to do out there. A lot of the mangroves helped keep the damage down. And I will tell you this, we bank nearly all the businesses out on Sanibel and Captiva, and I can count on less than one hand, way less than one hand, just a few scenarios where customers have decided that they're done. And by being done, I don't mean they're losing everything. I mean that they're instead taking the insurance check, selling the property for land value, which in some cases is higher than it was previously with a structure on it. And they're just deciding to not reopen their business. But every one of those little mom and pop hotels on the beach, they're rebuilding, and they're going to rebuild back to stronger specs. And they'll be bigger and better. It's going to take time. I'm not going to say that this is going to be a 2023 fix. It might be a season of 2025 fix. The restaurateurs out on Sanibel, the good restaurants on Fort Myers Beach and everything, they all want to rebuild, and they want to be there to service all these condo associations. We want to have the VRBO folks. We want to have the Sundial folks, the people that come here every year. They want to have a place to eat. So those people, those restaurants, they're going to be up and open very soon. I know we just had 2 more on Sanibel open this week. I know that several are slated for February. And I know most in Central Lee County, they were okay, whether it just be a roof fix or a dry-in. But again, just overall picture, very bullish on this area. Lending has not slowed down. The interest rate hikes are a real thing. So deals look thinner. Speculative lending might slow down a little bit just because projects don't make as much sense. But those that need to rebuild and want to rebuild because rates have gone up 2 or 3 or 4%, either you sell the land or you rebuild, and most are choosing to rebuild.
Okay, well, great, Kyle. We appreciate your input. We're going to move on. Our next presenter is Sean McNulty. Sean is the Chief Building Official for Lee County. So we're fortunate to have a bigwig here with us today. I guess also in the interest of full disclosure, the legal counsel for Sean's department is my son. So if you get into a debate with them, I'm going to win. So, I can just tell you that. Sean, thanks for being with us. Why don't we start with just kind of, your take? Obviously, you are responsible for, your office is responsible for a number of things. But I guess most relevant to today is the issuance of building permits. So why don't you start by just giving us, kind of your elevator version of what your life's been like in the last 3.5, 4 months?
Thanks, Joe. Thanks for having me and giving me the opportunity to share information that has been in itself a challenge to get out. There's a lot of misinformation out there, a lot of rumors about this and that, but as you said, we are experiencing just crushing workload for our department. Just for a few stats, I do these snapshot reports every day. Right now, there are 22,000 permits in between permits submitted and waiting to be processed to be issued. And working full bore, staff working full bore, overtime, weekends, hiring outside contractors. We're only issuing about 200 per day.
All right, well, let me interrupt you there. What would that number have been a year ago today? It's 22,000 that someone has asked for it and they're waiting to get it, right?
Yeah, I would guess in the neighborhood of the same on the daily, a snapshot like that, it's usually in the 300 to 800 range.
Okay, so all right. So any given day of the year, you've got about 300 to 800 people that have asked for permits and are waiting to get them. Right now, you have 22,000.
Correct.
Okay.
It is the.
So what are you doing here? I'm waiting for my permit.
Exactly.
So how are you dealing with that?
We are currently in a state of experimentation. Anything that sounds like a good idea, we're trying. Like I said, overtime is full bore. We allow staff to work from home. If they want to work, we want to give them every opportunity to do so. And my staff is very conscious of what they do and its effect on the economy and the recovery of the whole county. So we're getting good response from staff helping out, but the volume is just so high. It's daunting. And
let me interrupt you just to be clear. You only, and correct me if I'm wrong, you only have jurisdiction over unincorporated Lee County. So this excludes Sanibel, Town of Fort Myers Beach, City of Cape Coral, Village of Estero, and City of Bonita, right? There's 5 municipalities in Lee County.
Correct, and City of Fort Myers.
In City of Fort Myers, yeah, 6. So that's a big one, biggest one probably. So and do you know, I mean, the population of Lee's like 800,000 now?
Yes, but I think that includes the incorporated areas.
Yeah, how many of those, do you have a general breakdown? How many are in unincorporated versus those 5 municipalities?
I do not population wise.
But the point being is that your volume of 22,000 when there's usually 800 pending at tops doesn't even take into account 5 other cities and towns that are dealing with the same thing.
Correct.
And there's no reason to believe, particularly for Sanibel and Fort Myers Beach and probably Estero and Bonita and Cape Coral, all of them, I guess, maybe not City of Fort Myers, but they're not experiencing the same percentage volume increase as well.
I believe so. Yeah, it's
okay. So let's talk about what requires a permit and what doesn't. And when I asked Craig Millay of Sanibel, he said, well, the shorter list is what doesn't. The answer is nothing. So, let's talk about, from remediation, we had 2 inches, 2 feet, 8 feet of water. We had roofs blown off. We had this, that, and we have all of these disaster, companies have come in and, done the dry out and torn out drywall and whatever. Is it correct that all of that was generally exempt from permitting?
You're correct, yes.
So now the property's stabilized. So, that's what I call phase one. And we're through phase one as far as the work being done. We're in phase 1A where clients are getting $4 million bills and say, like, do we have to pay this? But we are not going to talk about phase 4A right now. But 1A now. Let's talk about, phase two. Okay, so we have to start putting drywall in. We have to start putting electrical in. We have to replace air conditioners and, HVAC. Some associations are hiring GCs, some are, subbing it out, some are getting these restoration contractors to do it, which we'll also talk about. But what's kind of the, the critical time path in terms of, how you see permits, how you like to see them, what requires engineering? I mean, just kind of walk us through the story of, a condo that, let's just say, had what I'll call average damage of, 3 feet of floodwater. So they need drywall, they need electric, they need HVAC, they had some roof damage, some wind damage, they may need some windows. What do they do with you?
Okay, so with that example, the Lee County Land Development Code, as far as being exempt from permitting, would be if you're replacing more than 100 square foot of drywall, then a permit is required. So I believe in your example that would trip that requirement. And there's also, if the total scope of work, if the scope of work includes more than one trade and exceeds $500 in value, that is the also other tipping point, which again, in this example, probably would tip both those. Now you're required to get a permit. For a condo building, it would require a general contractor or someone licensed to perform the repairs. And in this case, assuming that since it experienced 3 feet of water, it was in a flood zone, special flood hazard area. Therefore, the 50% rule would take effect. So in unincorporated Lee County, I'd like to say we're one of the more flexible in Lee County as a whole. With we take it case by case. We don't have a very rigid requirement of you must give us XYZ to proceed forward, and I hope that is heard as intended as being flexible. We will try and help the property owner and the building owners get to where they need to be.
Okay. With
as little trauma as possible. So in the case, we would take a look at the value of the structure as a whole, excluding the land. If the value of the repair supplied by the contractor exceeds 50% of the value of that structure, it would be considered substantially damaged and then would require to be brought up to code, assuming, again, this existing building that experienced 3 feet of water was not existing compliant to today's maps, flood maps.
So in some cases, that's going to require elevation of the base living floor of the building.
Correct. And there's a couple different strategies to that. I believe in Irma, we had one building, condominium building. They were considering abandoning all the units on the first floor. Therefore, the second floor now becomes the first living dwelling floor
Mhm.
as a strategy to bring that building into compliance as a whole. I
Right.
don't believe they actually went through with it, but that was one of their strategies that they were considering.
Yeah, and suffice it to say, that's a situation you need to try to avoid at every cost, because basically what that is usually going to involve is termination of the condominium, because, I own and have title to a box of air that starts, 6 feet above sea level and ends 14 feet above sea level, and you just can't move it up to the next guys. I have title insurance on it and all of that. So, yeah, I mean, basically, the 50% rule applies, first of all, to the building, right? It's structure by structure.
Correct.
Okay. So I actually have a question here, which I think is a good example. How does it apply to a coach home, 4 units in a 2-story building? So basically, what the county does is takes the value of that building with those 4 units minus the land. Now, the challenge, I think, is in condos, that's not really a calculated number on the property appraiser's website, nor in any appraisal methodology that I've seen. So, what we're telling clients is, you first of all got to look at, the scope of the damage. I mean, if it's, these units are worth $250,000 and you've got, $40,000 worth of damage. I mean, it's a no-brainer. Don't worry about it. But if it's, like a 6-figure number, that's where you got to, basically before you start pulling triggers, understand, how this works. And what, we have, been seeing on Sanibel, where I think this is probably the ripest so far, but we're going to be seeing it in every municipality, is, associations are getting appraisals that are, attempting to comply with the FEMA regs, because FEMA regs say you exclude land value, but it's supposed to be a market value, which is almost an oxymoron in condos because everybody owns the land. So, what I'm hearing you say is that, the county wants to work with people to interpret the law sensibly, and with the more desirable goal being to be able to put your stuff back together the way it was before you started, right?
Correct.
Yeah. So in that regard, one of the things that I understand the county did was to repeal its previous look-back rule by an ordinance. Is that correct?
That is correct.
Could you explain exactly what that means? Because I'm not sure I even get it. Not that that's a very high bar, but yeah.
What's commonly what people call the look back rule, we would be called the 5-year cumulative calculation. So prior to that change in our regulation, we had in our regs, when that 50% calculation formula was being used, the value of the repair that we would get from the contractor would be added to any permit pulled on that structure within the past 5 years of the date of that application.
So if I spent 40 grand on a new roof 3 years ago, you're going to add that onto what I'm doing now.
Correct.
Okay.
Correct. That was a higher regulatory standard than FEMA requires. We received additional credit through the community rating system, which affects flood insurance policy rates in the community, but we received additional points for having that high regulatory standard when we evaluated it with our consultants in FEMA. the loss in points that the county experienced didn't affect our rating. So we went forward to make the whole process easier from a logistics standpoint, just the whole permitting process, staff not having to look back 5 years is a plus. More, it gives people more wiggle room within the value of their structure in the 50% realm.
Great. Aaron or Sanjay, I know you both deal, yeah, we're up to our eyeballs on the 50% rule in some other localities. So this is, I think, a really refreshing point of view on this in relation to another conversation we had with someone else yesterday. But Aaron, do you want to jump in here and ask anything or say anything?
Yeah, Sean, and again, thanks for joining us today. You know, what many of our clients have been told in other jurisdictions is the first thing you need to do is go out and get a private market value appraisal. Is Lee County going to accept a certified Florida property appraiser's market value appraisal instead of the tax roll appraisal, or how are you handling that that part of this process?
We would, in unincorporated Lee County, accept a private appraisal that demonstrates market value, or either or. We'll take either. If the property appraiser's value, your contractor can get there with that value, that's fine. If you can't and they bring in a private appraisal, we take that one.
Okay. And is there, and I think I know the answer to this question, given your comment on the number of permits you're dealing with. In other localities, we've been able to secure commitments from the building department to have a what is being called just a pre-permit meeting with the building officials to go over the permit packet, because in servicing our clients, what we want to do is make sure that when we come to you for the permit with our application, we've already got basically approval, meaning we have everything that you need to make your job and your office's job easier. Is there some resource you have either on your website or elsewhere that you could provide? Because I think, again, understanding the devastating volume you're dealing with, it would be very helpful for us to be able to make sure between our design professionals, the property managers, appraisers, et cetera, that we give you a package that is easily digestible and makes your job easier and is going to sort of streamline the process to the extent it can be, obviously, for our clients. Is that something you can share with the group?
Yeah, I would never, full on deny a meeting like you described, but meetings like that directly affect the county as a whole, and digesting that volume. We do have a pretty extensive, there's so much data, it's over multiple web pages, but I could share those with you. I'm not sure where the best place to, whether it be after the meeting or if you
you can do that, and we'll post them on the website. And yeah, I mean, some of these things we're talking about $25 million permits. So at some point it's easier for all concerned. I don't think that's normally, the way that, it needs to be done. And I guess my question is, a lot of these are going to involve multiple trades and permits. I mean, in my example, we're going to have electrical, plumbing, HVAC, drywall, roofing, and doors and windows. So, the GC may sub all these out, but I mean, that just seems like if you count that as one of your 22,000 permit applications, that's like 10 permits right there, right?
We actually don't count it that way. That would,
Okay.
everything you described would be one permit.
Right.
That would include all those scopes of work that you just described. So yeah, among
So your
those
22,000 could
22,000,
really be 220,000 then, because it's got 10 permits inside of it.
correct.
Yeah. Hey, Sean, one more thing. Let's say we've got a 50-unit condominium where 25 of the unit owners are, don't want to have the hired GC that the association hired perform the work. They're going to come to you for a permit, and that permit is going to be for all the, what we'll call the common element works, roof, railings, building envelope, windows, doors, etc. And the build out of 25 units, but it's not going to necessarily include the build out of the other 25, yet there has to be some accounting for those, right? In the calculation of 50%. How's Lee County going to handle that?
Great question.
We Are you looking for recommendations?
I've got some ideas.
And let's put this in context for our audience. Let's say we have, condo that's 2 units, 1 unit over 1, 2-story, and we have, let's say 50 units. We have 25 ground floor units, and let's say they had 3 feet of water in them. Well, they're all going to have to be gutted. You're going to have new cabinets and all of that. The upstairs units probably aren't going to need that much, level of it. So of the 25 unit owners on the ground floor, and FEMA does pay for cabinets and stuff, although state law doesn't, I'll talk about that later. But let's say of those 25 that are on the ground floor, 20 are going to use the general contractor to put in their cabinets and all of that. But the other 5 want to go hire somebody else. Well, they're going to have to pull permits for that. So the question is, how does those individual owner things that are going to be done under the general permit, how do you account for 5 people we don't now have any control over?
And to answer that, I'll start with history. Go back to Irma, where we did have these examples. The 5-year cumulative look back actually helps us in that situation, because that would allow the association's contractor who's going to do the common area work and half of the units to pull their permit, do their work, and go on their way. Meanwhile, then every time another, whether it be a single unit goes to repair theirs, we had that value of the larger permit. We would just add to it and move forward. But by removing that 5-year cumulative, we have given us, it is going to be a difficult task, and that we'll have to work through to still ensure compliance with the FEMA's 50% rule, which directly affects all of residents of unincorporated Lee County flood insurance premiums. With our class rating of a 5, that affords anybody with getting an NFIP policy in unincorporated Lee County a 25% discount of those policies. So if we don't apply the rules, the 50% rule correctly, that rating can be put in jeopardy. Therefore, everyone's flood insurance rates could go up. So in that example, just shooting completely from the hip, if we know, first of all, that the other 25 units had experienced damage, I think that knowledge in itself might be difficult to say with certainty. Yeah, I can't. If your contractor says I'm fixing 25, why would we even ask, what about the other 25? Unless they were all, let's say, on the ground floor, obviously flooded. But to dumb it down maybe to the question that's in the chat, a 4-unit building would be a little much more simple.
Right.
3 foot of water on the ground floor, the roof needs some repair. That building most likely is in jeopardy of being, we would need to take a look at the 50% rule. And it's an easier judgment to make in a 4-unit building. Now with a 50-unit building, I think anecdotally, if the roof is damaged on a 50-unit condo and the ground floor experienced 3 foot of water, I think it would be pretty difficult to, from my position, to make a statement, I think that building is substantially damaged. Not that it's not impossible. If all the sliding glass doors on the whole windward side of were blown in and water and wind came into all those units, there's so many variables in an equation like that. Again, I'd hate to take a rigid stance on this is how we're going to approach it. I think it's going to be a case by case, working with the association, working with the other owners that wouldn't want to participate in the larger repair, down to even participating in a conversation like this with maybe just that association. Like, here's the rule, explain to them and trying to educate everybody in said building of the rules and what's at stake if it is potentially substantial damage, and how they need to, it's important for them to demonstrate correctly.
Okay, well, let me ask another question, Sean.
Okay.
I think I alluded to this, and it's one of the chat questions. How are the phase 1 costs calculated in 50%? I'm talking about the what we call the remediation, all the guys with the green matching shirts that show up, the 50 of them, and come in, tear out drywall, dry it out, whatever, and charge you $4 million. What of that is part of the 50%?
It is supposed to be included in the
Okay.
50% rule calculation. Again, we'll take whatever value that the contractor provides. And I don't know one to date that we've questioned or not accepted with the value of the demolition. I know those remediation companies, some of them had some pretty high prices and like the associations were fighting a whole nother legal battle on the side. But generally speaking, just because a remediation firm charged a condo association $100,000 to get all the 3 foot of drywall out of the entire building, doesn't mean that's the value of the labor and the cost to remove that. So again, we kind of take
go ahead. Sorry, please.
We kind of just try and take a case by case logical approach to, does that value make sense when we put it into the 50% package?
Right.
Ultimately, that may be subject to an audit.
Right. So yeah, we had one where we asked for a breakdown of the costs, and a 50-foot extension cord that you could buy at Home Depot for $29.99 was being rented for $60 a day. So I don't know if you'd count that or not.
Exactly.
So yeah, just for what it's worth, the Sanibel building official said that they count the tear out, the demolition, but they don't count the dry out or the hauling of the stuff off site, which in my view, the tear out itself is probably a fairly small percentage of those remediation jobs. I mean, a lot of it you're paying for the dry out equipment that's being run with generators. Those fans are $200 an hour, 24 hours a day, and the microbials and all of that. The actual cutting out of drywall is a relatively small part of that task in many cases anyway.
Craig, I would probably agree with Craig on that one, or take the same approach. Again, we would go by case.
Right.
If the contractor submitted and he said $20 worth per square foot for removing the drywall,
Right.
we would most likely accept something like that.
Great. Sanjay, did you have a question?
No, I was going to ask that question because that had been raised, but looking at the chat, I guess we kind of jumped into the 50% rule because a couple folks, at least one person asked, what is the 50% rule? And so I guess that's a fair question. And Sean, you're the building official. I'll let you answer that.
The 50% rule is the layman's term, or what most people call it, the FEMA 50% rule. In reality, FEMA calls this process a substantial damage, substantial improvement determination. When a building is going under any type of renovation, repair, or improvement, it makes no difference to FEMA. If the value of that repair or improvement exceeds 50% of the value of the structure, excluding land, if the value of repair exceeds the value of the structure, then it's considered substantially damaged or substantially improved. Therefore, would need to come into full compliance with all regulations, most notably the elevation requirement.
Right.
So, and this applies to single family homes, right?
Any structure, any habitable structure, even not accessory structures as well. But
so if you go into a lot of these subdivisions along the river where they were dredged and filled, the old Michigan homes with the 8-foot ceilings, and you want to add an addition on that, they're going to value that structure even whether you're repairing hurricane damage or just adding an addition. Once you exceed, let's say the house would sell for $700,000, but the structure might be valued at $300,000. You got $150 to work with. Once you get at $151,000, you're gonna have to raise that house 8 feet more off the ground, right? I mean, in some cases.
Correct. Or what we would call do the dance and adjust your scope of work that maybe brings it down to a 149.
Yeah. Okay. But that's what the 50% rule is. And obviously in condos, it's huge because you have to raise the elevation. You're changing everybody's title, which you can't really do without terminating the condo.
And Sean, to your point, because we had one post Irma, at least one, where it was not the residential condo building, but maybe a clubhouse or a laundry facility or something else where those buildings are separately impacted. And so that you do it on a structure by structure analysis, not you have the one structure, so now the whole complex has to be raised. You just do it building by building, right?
Correct. It is only structure by structure.
So if only the clubhouse were damaged, it could have to be raised to be FEMA, be compliant.
Right.
And just to be precise, I guess, this isn't a Lee County rule. This is a federal rule, which is required as a condition of, I don't know,
Everything.
being allowed to live in the United States. I mean, federal funding. I mean, there's a lot to it, right? I mean, you can't really, the local government doesn't have the authority to just say, you know what, we don't think that's a good idea. You're going to lose. What would you lose?
It's a requirement to participate in the NFIP program, which includes being able to purchase NFIP flood policies.
So if Lee County didn't follow this rule, nobody could buy flood insurance, basically.
Correct. Or we would be downgraded to a class 10, meaning we would get zero discount. And then there's different levels. They can't just completely kick you out of the program.
Well, the other part of that, and the question wasn't directed to me, is you might find yourself not able to participate in federally backed mortgages.
Yes.
That I believe is an underwriting requirement in most of those mortgages as well.
Correct. So maybe it is right. You're right, Joe. Maybe it's more like just to live in the United States. You need
Yeah, one other chat question, then we're gonna move on. But I wanted to ask this too. What engineering / architect / stamp sealed stuff do you need in, let's take just my example, which was pretty general, but probably not an atypical type of situation.
if it's non-structural repairs that are needed, engineering may not be required. There's a job value when the statutes require, I believe it's $100,000 or $125,000. If the scope of work exceeds that value, I believe Florida statutes require a design professional to be involved. But generally speaking,
Well, in a condo, though, not to interrupt you, but in a condo, is that permit wide or unit by unit? Because I mean, we're not going to see much under 100 grand in the condo world.
I think it depends on the scope of work of the permit in question.
Okay.
Per the statute, I'd have to reread it, but
Yeah, well, maybe we'll follow up on that in a follow-up program because, we're going to talk about, the phase 2 and, we think the associations need to have a design professional on their team, regardless of that part of it for a lot of other reasons, but, perhaps, that as well. So, well, Sean, we could go on all day. This is really, interesting, and we appreciate your input. We have about 20 minutes left, and so we're going to shift gears to our kind of legal side of it. I'm going to basically tell everything I know about condo law, which will take 90 seconds, and then we'll let Aaron and Sanjay jump in. But Sanjay, your emphasis, I think Sanjay joined the firm like the week before Hurricane Charlie, if I remember, or something like that.
I've been nothing but good luck for this area, I'll tell you that.
Yeah, and I won't even get into the rest of it, but yeah, and Sanjay has developed kind of a subspecialty in what we call first-party insurance, which is helping clients with their insurance claims. And we've seen, every storm has a little bit different dynamics as to the nature of damage it caused, the types of structures that were mostly damaged. I mean, Irma, for example, had a particular impact on Naples high rises differently than, other things. So we saw kind of things come out of these, but Charlie was its own because it was kind of like a buzzsaw, and within about a 5-mile radius of everywhere it went, there was nothing left. Could you, Sanjay, in kind of being at the very tip of the spear on the insurance adjustment process for Ian, just kind of give us your stream of consciousness of what you're seeing, where this is going, what people are doing wrong, what people are doing right, what we need to do here, or what we need to recommend?
Sure. So from the first thing with regard to kind of understanding what's happening, and I think you mentioned this before, folks are out there worried that others of their neighbors are completed, they're moving on, they're past Ian, and in 99% of the cases that's not true. Everybody's kind of at the at the same points as far as they've put in their claims, they've got the flood insurance folks out, they've got the wind insurance folks out, and that process is playing out. One of the key things that's different about this hurricane than prior hurricanes is that it is from a lot of our clients, a lot of Lee and Collier County, it is a 2-part claim. It is Charlie went through quick, Irma was a very massive storm, but both of those were primarily wind events. So you're talking about roofs, windows, sliding glass doors, those kinds of damages. And what you had in Ian was that it was also a flood event for many. I know where if you are west of 41, for example, in South Fort Myers area, you almost inevitably got impacted by flood. over by the Orange River. I know in Lee County, they also got a lot of flood. And so you had both flood waters and the wind damage. And what that does is it opens up generally to two types of claims. You've got your wind claims and you've got your flood claims. And and those are operated differently. Your wind policies are operated or controlled privately by your general carriers, whether they're an admitted carrier or a surplus carrier. You're governed by your contract. The flood policies are a little different. The flood policies.
So Sanjay, I'm sorry to interrupt you, but just one sentence explanation. What's the difference between an admitted and a surplus carrier?
Sure. An admitted carrier is one that is subject to the rates and by the Office of Insurance Regulation. They both are, the Office of Insurance Regulation technically regulates both of them, but admitted carriers are governed but for rates purposes and also are subject to FIGA, which is the Florida Insurance Guarantee Association, where if they go into receivership, which is the equivalent of bankruptcy for insurance companies, that an admitted carrier would be, you would be able to recover from FIGA per the FIGA limits, which are pretty substantial.
250,000 a unit.
Yeah, it's actually 300 a unit is the way it's calculated. So it's 300.
So just to be clear for future, because we're going to have there's an insurance crisis brewing, and we're going to have another program on that maybe in 6 weeks or 2 months. But if you have an admitted carrier and they go bankrupt, which some probably will from this storm, the state is guaranteeing you're going to get paid up to 300,000 a unit. If you have what's called a surplus lines carrier and they go bankrupt, you're out of luck. Is that correct?
Right. Yes, but the downside, prior to Ian, it was already difficult to get coverage for a lot of our condo clients from admitted carriers. So it was not unusual to see the surplus lines pick. A lot of clients have those because they couldn't get admitted carriers, and Citizens wasn't accepting any policy.
And in all fairness, a lot of these surplus lines are big dogs like Lloyd's of London and that kind of thing, right?
Yeah. I mean, not all of them, but most of the ones I've seen so far are some conglomeration of Lloyd's of London syndicates and their hangers on. I'll put it.
Okay. So go ahead. So we have you were basically, and that's a key issue though, because we did have Irma claims where the wind carriers went bankrupt and we had to get the money from FIGA.
Right. And
so just basically you're back into that, that wind is private market insurance that we're all used to, is no different than your car insurance, your life insurance. It's a contract. Talk about the flood now and go ahead and continue.
Sure. Flood. So I often ask people, well, ask for copies of policies and so on. And the flood insurance, that's a pretty typical condo residential policy because they're all underwritten and issued by the NFIP. I think Sean mentioned that before, which is the National Flood Insurance Program. The payouts are pursuant to FEMA. They're all administered though by private companies, whether it's Wright Insurance or whatever, other companies, Hartford. They administer those programs, but they are governed by, and those policies all read a certain way. And there are some interesting, I guess, if you're from a lawyer, distinguishing issues between what's covered under the flood policies, which cover things such as cabinets and finishes and things of that nature, as opposed to your private insurance, windstorm insurance in Florida, which doesn't cover those items. Those are personal property unit owner items. So there's a lot of complicating legal issues, which I won't get into on the condo side there. But for claims purposes, most of our clients that, like I said, are in the affected area, to the extent they've had both claims, they've put both sets of carriers on notice. And that's important. If you haven't put somebody on notice, you need to put them on notice because those carriers are going to come out. I know when my flood insurance adjuster came out, he looked at the property, and I don't think his eyes ever went north. I mean, he basically looked at eye level down. He's is what he looked at, and when the wind carrier comes out, they look at the entire building and say, okay, was this caused by wind or flood? And that's an important question. Is it flood or is it wind? Most of our flood policies have lower deductibles than your wind policies, but the damage may actually be windstorm created. Your wind policy is not responsible for flood damage, and vice versa. The flood policy is not responsible for wind damage. So where this becomes somewhat tricky is on our condo clients, especially where you have the first floors were wrecked by flood waters, but now you have the roof, the units higher up They clearly weren't damaged by flood water. And so when you have the rip and tear cost coming in and your remediation costs, that they are segregated between those two policies and submitted appropriately, because if you submit them together and try to get the carriers to figure it out, well, notwithstanding the commercials you see about you're in good hands and you get the money right away and everything else, you're going to complicate things and you're going to slow that process down. What needs to happen is, as best you can, those things need to be segregated. If you have a public adjuster involved, they should absolutely know that, and they should be segregating those costs and presenting them in a way to basically tell the flood folks, here's what's covered under the flood, here's what's covered under the wind, to the wind folks, and to try to move those payments along. The best example for those that are that may recall Hurricane Sandy that ultimately hit New Jersey, they had cases that stretched out for years, and a lot of those claims at the end were really not whether the building was damaged or not. I think everybody agreed there was damage to the building. It was carriers arguing whether the damage was caused by flood or whether it was caused by wind. Your elevator stopped working. Is that a flood cause? Is that a wind cause? Is it covered under either? So that's those are the kinds of things that will come up if they're in process. The other thing that on the claims side is just a couple of dates out there. We're not near any of them, but for your purposes, for the audience's purposes, under your windstorm policy, you have 2 years to make the claim. And I don't tell the insurance carrier you have damage. Insurance carriers hate, they both simultaneously hate and love late reporting. They hate late reporting because now that's another claim they didn't have on their books. They love late reporting because it's a defense. So if you have a claim, make sure you put that in on the windstorm. Unlike the windstorm, the flood typically has a 60-day payout. Okay, like you have to sign your proof of loss and submit the claim for flood within 60 days. Just given the size and scope of the damages from the flood, FEMA extended that to 1 year. So if you have not made a flood claim, and you think you have one, you have a year to make it and submit the proof of loss and all of that. But once again, if you got a question in this circumstance, whether you have a claim or not, you should talk to a professional. But I err on the side of making the claim. I've had clients to ask me, say, well, I don't want to make the claim and get that on my my history that I've made a claim. And my response after Irma and Charlie might have been a little different, but here after Ian, my response has been, everybody in the universe has made their claim or is in process of making it, because everybody in the universe down here got hit. Right, there was not a lot of like, hey, it hit there and missed here, which is something we saw in Charlie. Just given the size, you would have neighboring communities, one impacted and not the other. That I don't think has happened here, just because everybody got the flood water. We all rode it through the eye wall here and had wind pretty much all day. And
so Sanjay, just to be clear, the flood had a 60-day legal requirement for proof of loss, and that was extended to what, 6 months or
1 year?
1 year.
Yeah,
now,
go ahead.
But there is also, I believe, correct me if I'm wrong, a statute, a federal statute with a 1 year statute of limitations to file a suit under flood. Is that correct?
That is correct. So you have.
So you need to understand, and the statute of limitations on state law is 5 years, right?
Yes.
So, I mean, you need to understand that if you have a flood claim, while FEMA's, came right out of the gate, day one, we're not going to be able to deal with all these claims in 60 days. If you have not gotten an adjustment by a year from now, and you don't file a lawsuit, you lose your legal rights, unless they change the law, which they may, but they haven't yet, correct?
Yeah. As of right now, the 1 year statute of limitations for NFIP claims is that's what the law is. I fully expect that to change, but like you said, until it happens, that's the law.
So give us 3 minutes on the pros and cons in your experience with public adjusters.
Well, so the con, let me deal with the cons. Right now, in post every casualty I've ever been involved with, every public adjuster with a Florida license, whether they're from Texas or New York or Idaho, shows up, and you never heard of them, and they're out there drumming for business, and they are, like any other profession, of varying ethical considerations. I'll put it that way. what, you know, there are some very good public adjusters. And so what we, you know, and they can serve a very useful purpose, which is they generally get paid on a percentage. Insurance companies don't like that, but they often, the good ones are effective though, in making sure that your claims are properly presented and properly documented. It is not unusual for a client to think, hey, they don't have any damage, hire, you know, a public adjuster and say, oh yeah, you know what, there are these things that you missed, you know, these damages that the carrier missed, and present that. Some, you know, public adjusters also, you know, they don't mind seeing the client in litigation, which is really not in their best interest necessarily. And I think, you know, they include way too much. They're very aggressive in the claims, you know, what you want is to strike the balance between, yes, you're aggressive on the claim to make sure everything is in, but in a way that you're going to get that claim paid and ultimately resolved as quickly as possible.
I mean, we have clients, and we're not handling these claims, or hopefully they wouldn't be here, that are still in litigation over Hurricane Irma damage almost 6 years later, correct?
Yes, I mean, there are
without trial dates in federal court. Yeah.
Yeah, without trial, actually in state court too, because between COVID and everything else, the courts aren't, you know, didn't clear them out. But yeah, so here we are almost, you know, 5.5, 6 years after Irma, and those cases are still pending. So, and you know, listen, from that standpoint, there are some carriers that are very aggressive and don't like to pay claims. But, you know, when I see the things that they flag, is that there are things that are questionable, and sometimes you can get those resolved. But what happens is certain public adjusters and certain contractors, they're in that space now too, where they put together numbers, and if you get the right combination of adjuster or public adjuster and insurance company, you as a client may be, you know, up, you know, in for a fight for some period of time before your claim gets paid.
So the wrong combination is
yes.
what you're saying.
Yeah, well, yeah.
Yeah, I mean, look, I mean, what we tell clients is, you know, having a hurricane is not like winning the lottery. I mean, you know, you're not going to get rich off it. The goal is to be made whole. So in that regard, adjusters get usually 10% is kind of industry standard.
Right. So post with regard to the initial claim, emergency, there are emergency rules, and as soon as the state of emergency is declared, public adjusters are limited to 10% with regard to the initial claim. Now there's different rules with regard to supplemental claims, but you know, at this point, you know, nobody should be paying more than 10% with regard to.
But the point being is, I hired a public adjuster for the damage to my home, and I looked at it like FEMA sent me an adjustment of what they thought they owed. My wind did. I could have gotten that just by their adjuster, who's not an independent adjuster. Their adjuster works for the insurance company, and they said you're due X on the wind and Y on the flood, and they sent me that money. My adjuster has to get me at least 10% more than what I already have in my pocket from those two companies, and I'm ahead of the game because I wouldn't have known, you know, what else to do. And I'm pretty confident they're going to do that. But I mean, isn't that kind of the metric you need to use in considering the, you know, viability? Because the adjusters, when I looked at all the stuff that the way they measure, I said, yeah, that was all damage, but I would have never really looked at it that way.
Right, and that is true. The other thing that I think is important to note, that a lot of, especially on the condo side, these are big, complicated claims. You've got unit damages, you've got common element damages, you've got to put that together, you've got to do your own estimating. And a lot of clients, most condo associations, almost all, don't have the requisite skills or personnel in order to manage that process. That's what we've, you know, a lot of what we've seen after is that clients start out doing it on their own and then realize they are in over their head. And I know Aaron has had some experience with that too, where, you know, that the adjuster can maybe fill in the gaps on some of that, as well as potentially a project manager with regard to some of the remediation and reconstruction issues. So with regard to any of it, I would not do it yourself, kind of given all of the things that are at issue right now.
So Aaron, let's move to how not to make your reconstruction contract a bigger disaster than Ian, because we have a few of those, unfortunately more than a few. You know, none of us can change history, and all of us were under tremendous pressure in the wake of what was probably the most significant weather event in this region in any of our lifetimes, and maybe in a long time in history. And, we are where we are, we did what we did, but, how do we just kind of stop, look around, take a deep breath and figure out, where to go from here? Tell us, kind of what you've seen, kind of some of the ways to dig out of some of the holes that we may have put ourselves in, whether you're in a hole or think you're in a hole or not, what we need to go forward as far as the team, and just, share the benefit of what I'm going to call reconstruction project administration.
Yeah, Joe, I think the cardinal rule is no association or property owner, for that matter, should accept the contract that's provided by the contractor. I've been doing this.
Say that again. Say that again. Louder.
For the people in the back. No property owner should accept a contract that's provided by the contractor. I've been doing this for 16 years, almost 17 years now in Southwest Florida. I've never reviewed a contract provided by a contractor that does anything to protect the owner. Okay. So what we see with frequency in these circumstances are 2 or 3 page proposals for, $1 million, $6 million, $11 million worth of work, where there's no start date, there's no time for completion, there's no actual scope of work attached to the contract. There's no indemnity requirements. There's no insurance requirements. Nothing that you would have in what I would call a normal market circumstance, where you have two entities, an owner and a builder, who get together and they say, okay, we're going to do this project. Let's negotiate terms of how this is going to be governed. These guys show up. Clients, rightfully so, are a bit panicked because they're being told, if you don't lock us down now, you're not going to get in the queue. Well, we've been talking, this is our 3rd day of talking about the queue here. There is no queue. Construction was stressed in Southwest Florida on September 26th of 2022. It is beyond stressed now. Finding people to actually do the work on any of these projects is going to be a tremendous feat. So this is going to be a long, slow process, and to rush into a binding contract without a definitive scope, without a definitive start and completion date, without a way to deal with change orders, because we're going to see change orders on these projects. I think that's a mistake. So that's the first thing to do. If you're going to contract with anybody, you should have counsel review it, or somebody who knows what they're doing do that. The second thing is, you can't rely on the contractor to develop your scope of work. Not to say that every contractor will do this, but this is a ripe opportunity with, billions of dollars of insurance money at stake, where they're going to be out to get their piece of it. And they may overstate the estimates, they may overstate the scope of work. So our advice has been, hire a design professional, an engineer, an architect, somebody with specified knowledge in how to identify damage, and then develop a plan to repair it. And once you have that plan to repair and that scope of work, then you send that out to various contractors and get bids. You're not going to get a good price if you only go to one contractor, because you're going to get their highest price, and they're basically daring you to go out and get another opinion. So you should get competitive bids if you can. You should have somebody else prepare your scope of work. And then, you have to think seriously about hiring either that engineer who did the design work or another independent professional, what I would call an owner's representative or a project manager, to oversee the contractor during the course of the reconstruction. It just makes sense to me, particularly on projects that are going to be in the 8 figures, that these property owners would do well to have somebody as their advocate with boots on the ground, who knows what they're doing, can identify when a contractor is performing properly or is not performing properly, can evaluate pay applications, can sort through lien releases and things like that to avoid liens being placed on the property, paying for work twice, things like that. So I guess the main message is, while this is a catastrophe, the emergency portion is over. The immediate, mitigation is done. The immediate remediations have been completed. Now this is really just a basic construction project, and everybody would do well to treat it as such, and to go through this process systematically and deliberately. And frankly, what we've heard from Mr. McNulty today, what we heard from Mr. Mollet on Tuesday, they're not going to get to these permits quickly. So there is no rush. I mean, if you get in line today in Lee County, you're behind, 22,000 other people. So to me, the sense of urgency has passed a little bit, and it's really more important to do it correctly now, that you have the chance to stop and take a breath and set your path.
Okay. So what is your take on contrast, and obviously generalize the biggest mistakes that you've seen and how they can be corrected, and the greatest successes you have seen and how they can be shared?
Well, I think the biggest issue we've seen thus far is a lack of any specificity with material terms of the contract. So if you have a contract where you don't have a price, you don't have a defined scope of work, you have an unenforceable contract. Contractors.
Well, yeah, let's stop there, because we've seen a few of those, and what we're seeing is, I mean, look, I'm not going to call it a racket, but it's the only word that comes to mind. It's a business model, I guess, would be the proper term. But there are these companies that will come in and they, I mean, I'm not saying they're charlatans, but they have a certain business model. They'll come in, they're there when you need them to get the stuff done, but they want the whole job. And many of them are multi-million-dollar jobs. Most of them are multi-million-dollar jobs, and they've signed this contract that says we're gonna take care of you and get everything cleaned up, but then we're gonna rebuild everything, and we'll take whatever your insurance company gives you, unless we don't think it's enough money or something like that. I mean, what are the legal and practical problems with that kind of arrangement?
Well, see, as a general concept, I don't have a problem with a contractor who says, we'll do the work for whatever the insurance company pays. If that's the end of the sentence, then I'm okay with that, so long as there's a defined and specific scope of work, because what you're going to get.
But that's the problem. They're just saying, we'll do whatever needs to be done. You sign here, then who decides what needs to be done?
That's why in this circumstance, you want to have somebody else have prepared that scope of work, a third party, not the contractor, not you, somebody with experience who can say, these are all the things that need to be done. And if you decide we will do all those things, and we will do it for whatever your insurance company decides to pay us. I'm actually okay with that. The problem is what we see is we'll do it for whatever the insurance company pays. But if we decide it's not enough, then you're responsible for the whole.
Or even if they don't say that, let's take for instance, okay, we'll do whatever the insurance company pays. So they do the remediation, you have $8 million in coverage. They do the remediation, you got a $3 million bill. Well, then you get your engineer and it says, well, you have $7 million more worth of work to do. They're not going to do that. Or they get, 70% through the job and they've taken, more than it's going to take to finish, and they leave. They leave the job. So, I mean, it seems to me that, when you're painting your building, you usually have a contract that says you get paid this much at every stage, and we hold back 10% and all of that. And, to sign over millions of dollars with no scope of work. I mean, we're going to have some follow-up seminars. We're in phase 2. I mean, there's phase 5, which is where board members get sued. And we had phase 5 after Irma and after Charlie. And, this is, now is the time. And to me, kind of the one takeaway is, fast is not better in this. It's going to depend on a lot of things. This is not a universal statement, but, South Seas Plantation was closed after Charlie for 3 years. And the damage wrought by Charlie is nothing in comparison to Irma, although that was kind of landfall of major wind damage. But still, 2 and 3 years is not, going to be unheard of. I mean, I figure my own house is going to take 2 years to get back the way it was due to labor shortages, adjusting my insurance, all of those things. And I would rather do it right than fast. And, I get it. People are, cranky. We live in the information age where you can Google, who was the drummer for the Monkees, and you got the answer immediately. And you expect your condo to be put back together with that, that same sense of immediacy. And that's not, really, in my opinion. I mean, look, it's gonna, like everything else in life, it'll work out, a majority of the time. And in the minority where it doesn't work out, it's going to be bad. So what, in terms of clients you've worked with that you would say are on, a path to success, what would you share as what they're doing to kind of make sure that this goes as smoothly as possible? I mean, look, a heart transplant, can go as smoothly as possible. It's still a heart transplant. Nothing fun about this. But what would the kind of takeaways be to, make it more likely to succeed than to have a chance of catastrophic failure?
Well, I'm thinking of one in particular, and it's actually a Sanibel property. They hired a structural engineer to evaluate the property immediately after the storm, which I think the city was requiring, just to give a, okay that the buildings were structurally sound. They hired a public adjuster who responded quickly and has been working with them since. They did not hire a remediation company immediately. The thought process behind that is, look, you've got first and second story beachfront units that are decimated by storm surge. Okay. There's no remediating those units, right? Roofs are breached, windows are breached, doors are breached. Every unit has, water damage. If you are going to if they were not to meet or be below, I should say, the 50% substantial damage analysis, then spending $5-6 million on dry out demolition of interior drywall, et cetera, makes no sense. So they took this in a very deliberate manner. They hired us to get them a market value appraisal, which was done fairly quickly. And now they know what their denominator is for the 50% analysis. They're in the process. They've interviewed several contractors. They're getting bids for their scope of work of repair. Before they're going to do anything, they're going to know, yes, we're below 50% or we're not. And, you know, that was a really difficult thing to do for them. The board, I think, took a lot of backlash initially from its ownership, because I think you guys made the point a couple of times, neighboring communities had, 200 men on the property every day for a month. Well, they also got bills for, $7 million for those 200 guys a day for 30 days. And this property, didn't incur those costs, is not going to incur those costs. They've engaged their insurance adjusters who are in constant contact with their public adjuster. So, and they're no further behind or ahead of anybody else, right? I mean, they're exactly where everybody else is, except they don't have a massive remediation or mitigation bill. So, I know it's very difficult for folks to take that approach because, of course, everybody wants to get their units back up and running. They want to be able to rent them. People are losing rental income on a monthly basis. This is all very difficult, but we're talking about, sort of the tortoise and the hare analogy. These guys were the tortoise, and they're in the exact same place as everybody else who rushed out of the gate. And everybody's at a standstill now, waiting to get permits, et cetera, except these guys, like I said, have saved probably several $1 million in remediation costs. So that would be my example of somebody doing it right. Not that there was a wrong way to do it. I mean, people were making decisions with information they had in those moments. And, to your point about business models, these guys who do that work know what they're doing. They've got very savvy salespeople, and, they're good at what they do. They're good at selling that remediation work. The real test is going to be what can they do for reconstruction, because that, you actually need skilled labor to put in electrical systems, to put in plumbing systems. And what we had immediately post-storm was a lot of unskilled labor. So
and we had this scheduled for an hour and a half. We left the line open until 2. So we have still 105 people. So you're welcome to stay or leave. But let's go ahead. I'm going to try to go through the questions, because there's some really good and relevant questions to our program here. Is it a good idea to have the design company provide a project manager? Talk about clerks of the works and what the options are. And I think the absolute necessity of a project manager.
Well, I mean, a lot of engineering companies who do the design work will serve in that capacity through the reconstruction project. In addition to that, there are various other, what I'll call owners representative firms throughout the state that offer those services. And basically,
so what if your board president was the biggest concrete contractor in Indiana? Would they be a good person to be the clerk of the works?
no.
Why?
Because we're not in Indiana, and just because you own a concrete company doesn't necessarily mean you can run a multi-million-dollar reconstruction project.
Well, isn't also business judgment rule that if there is a claim for breach of fiduciary duty, you have the right to rely on licensed people who you reasonably believe are skilled in that field, which is project management. Look, a lot of folks know a lot about construction. I'm not one of them, but a lot of people do. But unless this is your niche, this is above everybody. I mean, period. So, what is your opinion of design build contracts, Sanjay?
There are pros and cons. One, you can, the typical three-party, situation when you have the owner, and then you got your design professional on one hand and the contractor. There's a little bit of tension between between the contractor and the design professional, because they if it's done wrong, contractor is going to blame the design professional and vice versa. So you kind of have that separate, and that little bit of tension, in my opinion, can be good. It keeps everybody on their toes. The fox is not guarding the hen house. I get the design build because then the theory is we're all on the same page and it's streamlined and we're going to get this done. My concerns about design build are a little bit that there's some insurance concerns, because a lot of contractors enter into these design build arrangements and they don't have appropriate insurance for designing because that's beyond their typical scope. They're contractors, they're not designers. And that they are, sometimes renting, quote unquote renting, a designer who is really not really focused. He's doing what the contractor is telling him to, and he's just captive. So going back to I like a little tension between the parties there to keep everybody on their toes. That's my thought. Now, I'm not saying they can't be successful, but that the successful ones I've seen require a level of input from the owner and the owner's project manager or owner's representative to kind of then keep, right herd on everybody. My 2 cents.
Okay, next question is, should there be a completion bond? Could you explain, I guess Sanjay, since you have the floor, the difference between payment bonds and performance bonds, and what a completion bond is, and your feeling on bonding?
Sure. So the typical bonds on private projects are a payment bond and a performance bond. And a payment bond guarantees payment to the subcontractors should there be an issue with the contractor paying. So that, and by the way, normally in my experience, they're sold together. They're not sold. You can, I think, get them separately, but generally they're sold on these projects together. So that
about 2.5% of contract price, is that the average?
It's 1 to 4, so I guess that comes to 2.5. Really good contractors that have a lot of bonding capabilities I've seen down near close to 1, and others I've seen up at 4%. So not every contractor can get a bond. That bond requires a surety to have evaluated their finances, determined the quality, quality maybe necessarily, but determine that they have the ability to, that they're not a high risk, because the surety is going to require personal guarantees from the contractors. But on public projects, that's required to get bonding and be eligible to bid. Not required on private, but I see that not everybody can get a bond. Just to say, you can ask if they are bondable and prove that without necessarily getting the bond. But we talk about payment. The performance bond is if the contractor goes, quick explanation, contractor goes sideways, fails on the project, you can make a claim on the bond, and they will provide another company to step in and take over the bond or take over the project and get the project to completion. As an old partner of mine once said, a bond is not a panacea. I've given you the quick, like how it should work. What it usually happens is you make the claim on the bond, and now there's a process to deal with the surety, get them to understand the failure on the part of the contractor, and get them to accept. So that's a process. I get asked this question all the time, especially given the size of some of the projects. A bond, neither payment or performance bonds are required on private projects. Okay, that is a decision for the boards to make. If you're asking me, I always prefer to have the bonds plural, because it gives me another potential pocket to address completion and or payment. But as Joe, you noted, it's 1 to 4% additional cost. So, I prefer as the lawyer to have that extra bond. I always advise clients that if it's available and they are able to afford it, to go ahead and get the bond. I will tell you that probably fewer than half, significantly fewer than half, the private projects I work on are bonded right here in Southwest Florida. And often that depends on if my client rep is a is a government, a retired government contractor from the Northeast. Those projects almost always get bonds. And if my client rep is a retired, something, a business guy from Tennessee, they often don't get bonds. I just kind of picking on a couple stereotypes there, but that's, I prefer them. I think there's some benefit to doing that, not required, and candidly, less than half get them. Yeah, I don't know.
Okay, I'm going to blow through the rest of the questions real quick, then we're going to wrap it up. Is there a percentage of shingle damage that requires the insurance company to pay for the replacement of the whole roof? Sanjay?
So yeah, there used to be the 25% rule that required a certain that level of damage required replacement of the whole roof. Now it's a very fact-specific determination as to whether the whole roof needs to be replaced or not. That's legislation last year that you'll need to look at what the age of the building. If you're prior to, I think, the 2010 building code, then you might still get to 25%, but you are now allowed under the building code to replace more than 25% of the roof without triggering a full roof replacement.
If we know the special assessment details and get the full dollar amount and collect the funds into our bank, why would we need a special assessment loan? How is this better than just getting the full cash in the bank? Well, the answer would be, if you're going to collect all of the money in a single payment installment, then there is no reason for a bank loan. Typically, it's when you're assessing an amount that you don't believe your owner, many of your owners are going to be able to or want to pay in one lump sum, and you spread it over a period of years. You get the money up front, but you basically amortize it over time. If you're collecting it all up front, then you should just do a special assessment. This would be for Kyle. What is the expected time frame from application to receipt of condo loan?
Well, that completely depends on how quickly the association can get it approved by their board. I know you said in this case of this situation under Ian that the board has capacity to do that on their own. I still like to put something in the file that there is a meeting, that there's minutes that the board has met to.
Well, yeah, the board has to have a meeting on 48 hours notice to approve it. I think the question is, when somebody calls you up and says, hey, we want to borrow, we need a $2 million line of credit. You've got an application, you've got your paperwork, and let's say the board does what it needs to do in a timely fashion. Are we talking, 2 days, 2 weeks, 2 months? I mean, what would be
typically between 2 weeks and a month? And that's if everything's in line, if they have a contract with their builder, if everything is in place. It's typically under 30 days to close. And we fund these typically like a construction loan. So you're actually, and I think, Aaron talked about this a little bit, and it's more protection for the association, where we're not just allowing the association to use a builder that the bank hasn't vetted. And we want to make sure that we're protecting our borrower with a builder that knows what they're doing, that we have the architect, the board, and myself signing off on these draw requests. And it's just not fly by night where the money is just going out to these contractors to be used other than the scope of the intent of the project.
Okay, what is covered by condo flood insurance? Electrical, drywall, water heater, what else? Florida statute for wind insurance requires the association's insurance to cover all structural parts of the building and all improvements to the building, including drywall, including doors, including windows, regardless of who maintains them. There's a list of items that the statute excludes, which includes floor, wall, and ceiling coverings, water heaters, built-in cabinets, and countertops. Federal flood covers those items. So there's a difference there. For example, wind insurance does not cover damage to cabinetry, flood does. As to electrical, wind, and flood would cover both. Is the association responsible for the Lanai screen due to Ian, even though our declaration states it's an owner responsibility? The responsibility to insure is different than the responsibility to maintain. What the law says is what I just said. So typically, even though an item such as a window may be an owner maintenance responsibility, repair and replacement responsibility under the declaration, it would be the association's responsibility to replace if it was damaged by an insurable event like Hurricane Ian. In my opinion, that would apply to screens as well. Can you talk about termination clauses in contracts if the contractor doesn't perform? How do we protect ourselves in staying ahead of the contractor? And I'm kind of making this part of it up, but I think it's part of the question, in making sure that if we terminate, we can finish the work. Aaron, you want to speak to that one?
Yeah, I mean, in any contract that we would prepare, there would be termination provisions, which, you know, for various circumstances would allow the owner to terminate the contract for cause, meaning the contractor is not performing as specified in the contract's terms and conditions, or performing the appropriate scope of work, et cetera.
So let me interrupt you. We do have also termination for convenience in some contracts. Is a contract, and that basically means, you know what, we decide we're just going to put a hold on this and stop work. We'll pay you what you've done to date. Do you think the industry is going to accept termination for convenience clauses in these types of contracts? I mean, they're committing major resources to scale your job.
Yeah, I mean, that's something we would always suggest, sort of the get out of jail free card. Market tells me that's going to be something, that's a chip we're going to have to give away in the negotiation. But sometimes it goes through. Sometimes these guys are so confident in themselves, they don't think it could be an issue. But if I'm representing the owner, I'm absolutely recommending it. If I'm representing the contractor, it's a non-starter.
Okay, final question. Say again, what is the federal and/or Florida law regarding the time limit for submitting claims against flood and wind policy? Sanjay?
Yeah, 2 years for wind, 1 year statute of limitations, which is different than notice. That's the date you have to sue by for flood, and you should make both of them immediately ASAP if you have them, and not wait for those dates.
There's also a policy defense for failure to give timely notice if it prejudices the carrier. So they can raise, you know, if you don't give notice for a year and a half on wind, they can still claim, while you're not legally barred by the statute, you haven't complied with policy, right?
That's correct. Most policies contain a requirement to provide notice upon a reasonable notice. So.
Okay, well, thank you again to our co-sponsor, Sanibel Captiva Community Bank. Thanks so much to our guest presenters, Kyle DeSico and Sean McNulty. There is all of their and our high school pictures up there. And we really appreciate all of the participants. 76, 75 of you have held on to the bitter end. So with that, we're going to end the meeting, and I wish you all a good day, and thank you.